Hello and welcome. Today is 15th January, and we are going to talk about the oil price and the possible movement and the pullback which has happened recently after the Middle East instability. So at this point of time, the current oil price is 58.22 dollar per barrel, and we can see here this is a stochastic RSI indicator. Here is RSI and MACD. So these are the three indicators. We will talk a little bit about the stochastic RSI, and rest of the indicators we will talk in later videos. So we can see that normally when stochastic RSI is close to zero, and then when it starts moving upward direction, that's where the bullish move start, and this is the important and very strong indicator where the possibility of making the profit is very high. Instead of entering at the random places where, for example, when the stochastic RSI is high and we try to enter, and there is a possibility as soon as we enter in, then the stock price or the oil price goes down. So it's very important that we have the patience and we enter on time, so that the probability of winning that trade goes very high. Of course, in the stock market and in the commodity market, nothing is 100% and nothing is guaranteed, but we can be more patient and to wait for the signals where the possibility of winning trade is higher. So I can see that at this point of time, uh, the the oil price has pulled back quite a bit from the $65 to all the way $58, and in the 4 hours chart we can clearly see that there is a divergence is like this: the price is going in one direction and the indicator is going in the opposite direction. So that's what we see at this point of time. Here it is like, so slope is downward, but this stochastic RSI and RSI as well as the MACD, they are moving upward direction. Now again, 4 hours is just to check at the early stage, but we will take the position when we see in the daily chart, when we see the clear indication of the upward move in the daily chart. So coming back to the daily chart, if we see the price today, the price has reached to around 57.51, and then it bounced back. Now you can see that this is a trend line for the recent bullish move which had started in the October. It went a little bit down and then jumped it back. If we, let's try to draw the Fibonacci retracement. In the Fibonacci retracement, we will have an idea what are the various levels from where the price can bounce back. So at this point of time, we can see that the current price is almost at the 50%, and 50% is a very strong, considered as a very strong bounce back level, and the probability of bouncing back from this level is quite high. If it breaks this level and comes down, then it may come down to probably $56, or further down to $55, or it can bounce back from this trend line as well, which is a long-term trend line. But the possibility of hitting 55 might be higher in that case if it breaks the 56 level. However, at this point of time, it does not seem that it will go that deep. Uh, but however, we need to wait until we see the bullish signal where we can take an entry in. Um, how, so here, so 58.31, that's what is the level, and this over that point the trend line, if we see the short-term trend line is also crossing up there. Now if this price goes above this trend line uh, in next couple of days above 58.64 or 70, then that would be considered as a positive signal. However, there is a still possibility that it may consolidate and hover around this 58 dollar per barrel price for few days, and then it will start moving into the upward direction slowly. So at that time we will have the good signal if whether to enter into the trade or not. So from the downside it will have the resistance, the first resistance will be at 56.53, and the second resistance could be $55, and going below that the chances are really less. One of the reason is the current Middle East situation, and at the same time the last presidential year. So we will talk about this historical fact and the historical data about the oil in the later videos. But at this point of time, we are going to talk about the price action. So in another point is the uh, short-term trend line has also been, like, crossed. You can see here the short-term trend line, which it has broken and it has gone up. So uh, if it does not if it does not fall below this trend line, in that case there is a possibility that, sorry, it moved around, there is a possibility that it will continue moving up. And we already saw the 4 hours chart where the divergence is already forming, and this diversion could be a good indicator. However, there is nothing 100% but good indicator that the positions are building up, and possibly it could be a good time to enter in with a calculated risk and decided positions. Like, in case now individual can have the different positions sizing for the entry. So for example, if I want to enter, I will enter here at 1/3 position, and then later, based on it which way it moves, I can add up the more positions. Now this is about the oil, and we need to have the commodity to trade the oil. We need to have the commodity uh, future trading feature enabled in our account. But many of the traders or the investor, they don't have that. So there is a ETF for the oil, and we can use the ETF that is UWT. This ETF is the derivative of the oil price, and this ETF is, as it names, the velocity 3x long. So this is 3 times either direction move based on the oil price change. So if oil price changes 1%, in that case this ETF UWT will move 3%. So it is 3x velocity in either direction. So it can be a great reward, or it can be a risk as well, in case it goes in the other direction. Uh, However, there are this ETFs are not to hold it for a long time, but it will be short time, like from a few days to few weeks to a few months, but not of course not years. So we need to be in the trend, and once trend is over, then we should be exit from this ETF, since they over a period of time they decay due to certain commissions and charges by the Citigroup to maintain this ETF. So at this point of time, it's a $12, and this also appears to be uh, uh, a uh, good position which we can make here in the ETF. We can see that, yeah, but sometimes what happens, this may not exactly be uh, moving in the same way as US oil, since there are certain charges being applied on this one, and that decays the value every day some cents. So it may not be exactly same. So this is one of the ETF which anybody can use it to trade the oil in the US stock market. So going back to the oil price, US oil. Over here we analyze that the bull flag is forming up over here, and the possibility of going the oil prices in the upward direction over here. And we can see that once it goes up above this trend line, then it should be holding the price, and then eventually it should hit the 65 as a resistance, and it might have pulled back after that one, and then continue moving forward. So this could be a good trading possibly. However, this is not any financial advice, but this is just an analysis for this particular ETF and US oil commodity. uh, in future videos, we will talk more about the history of the oil, and the oil prices in the especially when the Middle East has an instability, and the current economy, world economy has been inflating quite a bit, the uh, and the downturn is expected in a, in a in a year or two. So at that time, how the oil price performs and how it moves and how we can benefit out of that one, that we will talk more about in the later videos. So for now, this is what it is, and uh, you can also try to look more into UWT as a for an short-term trading position. um, I will keep updating you uh, on the signals, buying signals or exit signal, where we can add more positions, uh, and we will talk more about the oil eventually. So thanks for watching this video, and subscribe for the channel, and you will have more detail on the, eventually I will add for the oil, so silver, gold, and the stocks analysis as well. Thank you.